my goal is really to help you understand the key points of Social Security. The information that we should cover should help you become aware of, your options, what to consider about the timing of receiving your benefits, which is a big one. I'm also going to provide resources for additional information for you guys to utilize. And best of all, we're going to give you a quiz at the end of this. So all of this is really designed to help you make informed decisions about Social Security benefits. And so ready or not, we're going to get started with this today. So here we go. So when you think about Social Security, you've got to really understand, what is it meant to be, right? What comes to mind when you are think about Social Security? A lot of people are wondering, well, is it going to be around when I need the benefit, or am I eligible for the benefit? When can we start taking benefits? Well, I know there's 62, but I know retirement age is 59 and a half without penalties, but maybe I get more benefits later. So, how, when, and why should I start taking my benefits? And then, what's a good strategy for me to be able to maximize my benefits? I've put into this program for 60, years, or 45, 50 years. I want to get my money's worth and, make sure that I get my fair share, so to speak. How do I maximize those benefits? So we're going to go through, a lot of that today. Again, if you guys have questions, I encourage you, please utilize the chat field. If there's something else that's coming up. But for questions, the Q&A box is being monitored. And, we'll stop here and there throughout the presentation. And we're going to have time to take a bunch of questions at the end of the seminar to really talk through those maybe pieces that maybe had some ambiguity or just need a little more explaining. I will emphasize, though, I'm happy to speak on specific situations. We want to try to avoid getting into the specifics today. And with that, I'm looking forward to sharing some information with you guys today. So thinking about Social Security, really the fact is a lot of people like yourselves don't know some of the answers about Social Security. And a lot of people don't know some basic facts about Social Security. And you got to know some of the basics. And I'll show you I'm not going to show you, but, a recent survey, less than 25% of the people know what is their full retirement age. 70% of people think that they're eligible for full benefits before they actually are. And then workers with 10 years of retirement normally overestimate their monthly retirement benefit by almost 30%. Those are some big misnomers, and it's important for us to be able to dispel some of that information, and we're going to do that today. And so we're going to talk through the presentation through the webinar, and I encourage you, jot down some questions if they come up, and we'll get on. So knowledge is power, right? We talked about just kind of some of the basic misnomers. So while attending today's presentation is really a good way to learn some of the basics, at some point you're going to want to check out the website for more comprehensive information. And that's www.ssa.gov/planners. If you take one note today, write this down. It's on the slide. The site has numerous links to helpful pages within the site, including calculators, publication, life expectancy estimates, etc. So this is a great website. Please, www.ssa.gov/planners, and it will at least get you to a kind of an aggregator of information in regards to Social Security. So let's address some of probably the single biggest question on people's minds today. Will Social Security be here when you retire? So according to a recent Gallup poll, 67% of people worry about it a great deal or a fair amount. So what's really happening with Social Security? Do we need to have this worry around? And so, Social Security benefits have always been considered a pay-as-you-go system. And this means that Social Security taxes are collected from today's workers and go to pay today's retirees. And so for many years, more workers paid into the paid taxes than the system needed to pay out to retirees at the same time. So more money came in than went out. Perfect. And the excess started to accumulate in a trust fund that actually reached $2.9 trillion at the end of 2018. But now, due to mostly the large number of baby boomers who paid in during this time, they're going to continue to retire over the next several years. But the worker to retiree ratio has started to shift the other way. Soon we're going to reach a point where there isn't enough money coming into the system to pay out all of the people claiming benefits. This will actually make up a shortfall. The Social Security Administration will begin pulling money from the trust fund at that point. And it's important that you remember that this is somewhat a expected outcome given the baby boom, okay? So what do we do? What should we think about? What's the future of Social Security? Well, Social Security Administration projects that the current trust fund balance will only last till 2035. Once it's depleted, benefits can only be directly from the Social Security taxes that are collected from the current workforce. Projections show that will really only generate about 75% of what's needed to pay all the benefits that are an obligation or promised to retirees. So the Social Security Board of Trustees really believes that most likely there needs to be an adjustment, and that's going to come in the form of either a reduction in benefits or an increase in taxes or a combination of both. We don't know. Congress has to legislate and make those changes. But the important thing to just take to heart is Social Security isn't going away. It's not going to go away. Even if we get to where the dire projections, we're still at 75% of the benefits. So not including your Social Security into your retirement plan at all is probably a little egregious in regards to being conservative. But if you wanted to be more conservative, maybe assume a 50% Social Security for a conservative kind of projection in regards to what your retirement could look like with that Social Security benefit added. So when can you claim those benefits? Well, this is a big one. When it comes to begin receiving Social Security benefits, you've got a range of options. You can begin receiving benefits anytime between 62 and 70. The full retirement age at which you can begin receiving 100% of your primary insurance amount, which is the known as full retirement age benefit. That's your full benefit from Social Security. Is really depends on your birth year. But for example, those born in 1960 or later reach their full retirement age at 67. And as you can see on the chart, when you start getting it, even though you're eligible at 62, that's really early Social Security benefits or a reduced Social Security benefit. People need to start thinking of it as a reduced Social Security benefit, because till you hit that 66 or 67, you're not getting the full amount that you are technically entitled to or could earn. And so it's important to just kind of think of it that way. A lot of people think of 62 as, hey, I can begin taking Social Security. I should take it right away because it might not be here. Well, we've already kind of dispelled that. It's going to be here. We'll figure out the rest. So an important note about, additional Social Security benefits. So I want to call out something very specific and important, right? And so you'll hear me return on this point several times during the presentation. I just said it the last slide. Social Security is not going to go away. The other thing is Social Security should not be considered as a primary source of retirement income. So let me say that again. Social Security should not be considered a primary source of income if you can help it. It's important to save early and save as much as you can in your 401k, your TSPs, your individual retirement accounts to help meet all those income needs. And we'll talk about more of this later, but I just wanted to drive home that point. that Social Security was built and brought into existence to be a kind of a social safety net. And that's how it needs to be looked at. So if you file at an age other than your full retirement age, your benefit amount is reduced or it's increased. Filing earlier gives you a reduced benefit. Filing later gives you an increased benefit. Okay. So somebody who is a full retirement age, 67, here's what you can expect kind of based on the age you actually file for some benefits. So 62, guess what? You're getting only 70% of your benefit. 60, we get 80% at 64, 100% at 67. Well, guess what? At 70, now we're getting 124%. Well, that's pretty good. I mean, I waited an additional 8 years, but now I'm getting 124% of my benefit, which is very significant. Because the other thing about this benefit is that benefit is for life. So why would anybody make the decision to take it earlier, right? Well, everybody's situation is unique. So it's important to look closely at the trade-offs really to make that decision. On the slide, there's some reasons why you might want to claim those benefits earlier. Can't work, health reasons, life expectancy, job loss. You just simply need the money to live. Those are all valid reasons to take Social Security earlier. Not everybody can delay it, but if you can, it's an important way to increase your benefit that will last a lifetime going forward. So here's some additional reasons why you wouldn't want to claim it, okay? So you don't need the money right now, pure and simple. That's perfect. You've got income from other sources. Maybe you have a pension, maybe you have a 401k, maybe it was an inheritance that came in that you're able to utilize. You believe you have a longer life expectancy. When did my grandparents are both still alive? On my dad's side, they're both in their 90s. My grandma lived till 96. So gosh, for me, I have a really long life expectancy. I'm going to try to turn on Social Security later in life. I'm going to continue to work at some level. Maybe I'm going to do a part-time job. Maybe my career is a lawyer and I can work, 15, 20 hours a week because I love doing it. And so I don't need the income. Or simply, you just like the idea of getting a higher benefit over the long term for the rest of your life. Those are all great reasons for waiting to take Social Security. So I'm going to just take a quick look at our Q&A real fast. And the one question in Q&A is a little specific, so I'm gonna go ahead and I can always answer that afterwards and reach out to you specifically. So we're gonna keep on moving. So let's talk about the moment where you start to decide, look, I need to take the money and I need to get Social Security. So a few things to think about. According to the Social Security Administration, the average retired family receives 38% of their income from Social Security benefits. So that amount of benefit that you receive may be higher or lower than your average, than the average, but it's likely that it's going to be your only in-stream that adjusts for inflation, right? For 2020, retirees' benefits were increased 1.6%, known as the cost of living, or COLA, as people refer to it commonly. It's backed by the United States. It will pay you for as long as you live, which is all pretty good, right? So, those are great things to have kind of in your back pocket, and you can count on the Social Security Administration for that and the US government that backs it. So a little bit of information in regards to, well, what are the impacts from this income on my taxes, right? The Social Security Administration does tax your benefits. Yeah, it would be nice if they wouldn't, but they do. However, it depends on your combined income, which is the sum of your adjusted gross income from your tax return, AGI. plus any non-taxable interest. So if you are getting dividends, things of that nature, that's going to be included as income, plus 1/2 of your Social Security benefits. So here's the current table in the slide that is the current taxable amounts for both individuals and those following a joint return, right? So less than 25,000, guess what? Nothing. 25 to 34, 50% of that is taxed. More than 34,000, 85% of it taxed. Same thing roughly with the joint. The numbers are a little elevated, but not by much. In the DC metro area, you can pretty much assume that you're probably going to be paying about 85% of that portion is going to be eligible to be taxed. It's just kind of where we live in a high rent district or metro area. If you've moved out of this area, maybe it's not, maybe your income's less, and then more of it's going to be not eligible to be taxed, which is fantastic for you. So what happens if we're working while receiving benefits? Well, if you plan on working while receiving benefits, you can definitely do that, and you can definitely receive the benefits while you're working. That's the good news, right? You can work while receiving the benefits. The bad news is there's a limit on how much you can earn before your benefit actually is reduced. So for 2020, that limit is $18,240, and that amount can be adjusted each year with inflation, right? The other good news is that limit only applies up to a full retirement age, which is when that goes away entirely. So say you did early retirement, and for some reason you took it at 62, and you were working that time, and you made $18,000 every year. Guess what? Your Social Security wasn't adjusted down. It wasn't reduced. Once you hit that full retirement age at 66, 67, depending on when your birthday, you can make $40,000 and your Social Security Administration payment is not going to be reduced. You are no longer eligible for it to be reduced. Very important. This number, the 20,000, or excuse me, the 18,240, again, it adjusts every year. So what is the penalty kind of if you are getting reduced? Well, the reduction is $1 for every $2 you earn over that limit. So here's an example. For someone who earns $20,000 while receiving benefits, in this example, they were $1,760 over the Social Security limit. So the benefit reduction would be $880, $1,760 divided by 2. Any reduction is probably not what you're going for. So if you need to work, don't just, hopefully you're not just getting over that mark, so you're starting being eligible, and sometimes, you just have to continue working because you love it. And you know what? It's just, maybe there wasn't, maybe you shouldn't have taken Social Security when you did. Maybe you had to for a certain reason, and the situation's unavoidable. But at least you're going to be prepared to know that your Social Security could be reduced before you reach that full benefit limit age. So benefit reduction during the year you reach full retirement. So give you another example. The limit for the year in which you reach your full retirement age is currently $48,600. So a lot more. The reduction for that year is $1 for every $3 in earnings. So here's an example in the slide. After you reach full retirement age, as we talked about, there's no limit and there's no benefit reduction if you continue to work. But in this case, you would have been $1,400 over, and you would have had a $467 benefit reduction. But the Social Security Administration is almost encouraging people to earn that extra money once you get to full retirement age. So moving forward with your Social Security planning. So when it comes to planning, there's a lot to know and understand, and many of the details are bound to change over time. I put together 3 tips to stay on top of Social Security and really prepare yourself to make the best decisions for your financial future in the slide. Continue to increase your knowledge. Utilize that website that I gave you earlier. Keep a big picture perspective. If you're not working with a financial advisor like Fellows or somebody else, and you don't have a written plan about how you're going to retire and what does the drawdown of your assets look like, and are you going to outlive your assets? What's the probabilities of that? How does Social Security play into it? Have you examined the strategy? Get that professional advice. It's very important to have a comprehensive, holistic plan when you're looking at retirement. It's not something just to do at, hey, I'm 62, been working for the government for 40 years, I'm going to retire. I want to know if I make sure I'm going to have enough money. You'd be surprised how many phone calls I get like that, not just from people that have worked in the government, but in the private sector as well. So keep a pulse on what is happening with the Social Security Administration, and read news articles about it. And obviously, SSA.gov is the ultimate source for information on Social Security. So, as I said, continue to increase your knowledge, right? So 2 other websites is AARP's Social Security Resource Center, and then also Social Security Planner, as we talked about earlier. Please, again, as we are going to be sending out these slides afterwards, and this is being recorded, so you'll be able to have these if you weren't able to write them down before moving on to the next slide. So you want to just keep a big picture perspective, as we talked about. According to Social Security Administration, the benefits of Social Security, on average, will replace about 40% of the average employee's pre-retirement income after retirement. Here in the DC metro area, that 40% number is less. It's in the high 20s to low 30s, given the DC metro area is on average a higher income capita area. And so that's even more important to keep in mind, that Social Security is really going to account for less of your average pre-retirement income than most people in the country. So the replacement percentage will actually be lower, as I said, in upper income brackets, and just the opposite for people in lower income brackets. In addition, most financial advisors say that a typical person, you're going to need about 75 to 80% of their pre-retirement earnings to comfortably maintain your pre-retirement standard of living. So if you took 80% to be a little more aggressive in what income you're going to need because you're going to travel, etc., and if we just took the 40%, we still have a 40% gap in income that we need to make up. And so hopefully the TSPs, the 401ks, the IRAs, the general taxable savings has been accumulated during the years of employment, so they can maintain the post-retirement standard of living just the same as the pre-retirement standard of living. So just food for thought in regards to where Social Security kind of comes in and fills part of the gap from a retirement standpoint, but far from the full amount that will be needed upon retirement. So, obviously, you can work with LPL Financial, Fellows Financial, your other professionals. I encourage you just to work with a professional. Social Security is very in-depth. There's multiple strategies on how to maximize the benefits and to make sure that, one, you get what you've put in, and also to hedge against some risk inside your retirement plan. And so I always want to encourage you guys to reach out to a professional, reach out to the Social Security Administration for additional information regarding your specific situation. You can make appointments with the Social Security Administration on the phone or online. So I encourage you to do that. So we're going to take a little quiz. And
hey, Michael.
Yeah.
Do you want to address some of the questions before the quiz, or do you want to wait till the end?
Yeah, might as well.
Do you want to read them out of the chat box or the Q&A part, or you want me to read them to you?
Hey, go for it.
All right.
Save my voice for a moment.
Okay. Is there an age when you can work full time and collect Social Security?
Yes, so you can always continue to work while collecting Social Security. Your Social Security benefit can potentially be reduced if you're making above those numbers that we talked about in the slides. So if you're making significant income above those numbers, yes, your Social Security benefit will be reduced if you are before your full retirement age. Once you are after your retirement age, you can make as much money as you want, and your Social Security benefit will not be reduced by one penny.
What is the process or options for married couples when taking Social Security?
So this one's a little more complex from a strategy perspective. It's really going to depend on earnings, lifetime earnings that Social Security Administration is giving you. And it's going to depend on life expectancy. It's going to depend on um, marriage status, previous marriages, things of that nature. So not an easy one to answer right offhand. Um, Normally a rule of thumb is delay till you can. If you don't need the money, don't start taking the money, especially if you have a longer life expectancy or are just living a healthy life.
Can my husband receive my Social Security after I die?
So your husband will receive whichever is greater. So if his Social Security is greater than yours, he's going to continue to receive his. If yours was greater than his, he'll now receive yours and stop getting his. He won't get both.
What about collecting off an ex-husband's Social Security? We're married over 10 years and I haven't remarried.
That one's tricky, but yes, you can normally get, you are eligible to collect on your ex-husband's Social Security with a few caveats in there.
You're collecting Social Security at 62, ex-spouse is a couple of years younger. Does the ex have to collect Social Security for me to collect on their beliefs? Maybe I'll send, well, this is
Anonymous.
is this offline kind of thing?
Yeah, that one's pretty
Okay,
good.
so anonymous attendee, if you want to, everyone's going to get Michael's info in a follow-up email after, so anyone feel free to contact him one-on-one, and I'll keep moving down the list. A lot of these are, some people want explanation more on slide 17. I don't know if you want to switch back to that or wait. Okay.
I can take a look real fast. This was just saying, so slide 17 was basically, I'm going to actually go one further. So if you are not at full retirement age and you're making over the hypothetical limit for your age, you are going to be taxed, right? And have a benefit reduction. And so that's one for every $2 over the limit. But in the year of you reach your full retirement, then it's $1 for every 3. So it's a little less. So that's, if there's additional questions on that one, I can always take that offline.
All right, and then one more slide review. Did we go over moving forward with Social Security? Again,
Which slide was that?
moving forward with Social Security. This one.
So yeah, so it's just these are some of the, increase your knowledge, right? You keep the big picture perspective, have a holistic and comprehensive plan kind of with your financial advisor, or consider, if you don't have one, consider working with an advisor. That's, one of the perks of, having an account with the United States Senate Federal Credit Union is we're partnered with them. But overall, you want a comprehensive written plan, and you want to understand how you're going to be able to live off your assets with Social Security included as an income stream and without, just to play both sides of it.
Okay, and I think it was the slide before. You said are you penalized or not penalized?
Yeah, so you still have that reduction in Social Security benefit, but it's a smaller deduction. It's $1 for every $3 in earnings, only in the year that you reach full retirement age.
All right. And the rest, I believe, I'll read through them more while you do the quiz, but could possibly, oh, there's a lot of questions, Michael. I don't, no.
Okay.
Okay. So should we do the quiz and then come back, or what would
Yeah,
you?
sure.
Okay.
So just see if you guys can answer these questions. On average, what percentage of income does Social Security currently replace? And hopefully you know what it is, but the answer is C, 40%. So next question. In 2019, the average monthly Social Security benefit was what? Give you guys a sec. It was A, $1,461. So if you were born after 1959, at what age are you scheduled to receive full Social Security benefits? The answer is 67. So the last one, are Social Security benefits taxed? The answer is maybe. So as we talked about, it kind of depends on your income from other sources. And if you're working, creating that other income, and up to 85% ultimately of your benefit could be subject to tax, but the actual percentage is going to vary according to your total income. And so, Carrie, with that, we can go through any other questions. I'm happy to answer if we can over chat or the webinar, and keep going from there.
Okay. I'm going to read, and if you tell me offline, I'll just move on to the next one because
Sure.
I'm not sure. I'm not good at pinpointing them before. If you consult via an LLC, only the disbursement from the LLC to the individual would count as income that would affect the benefit reduction income threshold. That is a question.
That's a maybe. It depends on what type of tax status you have the LLC. There's a lot of variables in that one. I would just say, consult your accountant on that one.
Could you review work income when someone reaching full retirement and full Social Security benefits?
I believe we did that already,
Okay.
but ultimately your Social Security benefit can be reduced. This is the slide. So right here. So this is the tax. So your benefit can be taxed, right, depending on your income. And then it can also be reduced if you're making more income than the limit for the year that the Social Security Administration subjects or sets. So if you're making more than 18,240, you're getting kind of a benefit reduction of 50% on that overage. So, and then in the last year, it's a third deduction of that amount.
All right. I reach full Social Security age at Social Security at 66 years and 4 months. If I work during the year, can you discuss how much I can earn before my Social Security is reduced?
Yeah, so the year you turn full Social Security age, it's the 20, I don't have it memorized. Let me just go back to it. So it's right here. So right this year, the limit's 48,600. So if you're making over 48,600, then you will start getting a benefit reduction. After you at that, because that is the year you are turning full retirement age. After that, you can make as much money as you want.
How does railroad retirement affect my Social Security benefits?
Woo! Offline.
Okay. You mentioned that there is a reduction in your Social Security benefit if you exceed $18,000 in income. If you are receiving a FERS benefit supplement, will that be affected, i.e. reduced, if you earn income?
I don't know if the FERS benefit will be reduced. It is considered income, so depending on what that FERS benefit is, it could reduce, it could equal a Social Security reduction.
Okay.
As always, consult your CPA.
As a divorcee, will I be able to draw from my ex's Social Security or SSA, and will he know I'm doing so?
There's some specific rules around drawing on a divorcee's Social Security. There's not going to necessarily be notification, but it's not going to be hard for your ex to know. But you are normally entitled to some of their Social Security. It depends on a few variables, and you'd have to go through the Social Security Administration to really fine tune what those variables are.
As a civil service offset retiree, will my Social Security payment only come from my pension offset, or will it include more?
That one's offline.
Okay. If you start your own business after retiring, will those monies earned be considered as well when drawing Social Security?
It depends on your age. So if you are above full retirement age, those monies are not going to be considered, and you won't have any benefit reduction. If it's beforehand and you are not full retirement age, which is 66 and months or 67, you'll be eligible for a reduction in benefits.
Okay, this one might just need a little more clarification. If I wait until age 70 to receive benefits, can I still work and not have my benefits reduced?
Yes, absolutely. Sorry. So if you are not taking your benefit and you continue to work, there is nothing, Social Security there's no impact to your Social Security whatsoever. If you continue to work and are not drawing a benefit.
If my wife's spousal benefit from my earnings exceeds her benefit from her earnings and she takes the spousal benefit, but I keep working until my FRA, will my benefit continue to increase?
As long as your benefit is not being taken from you, your benefit will continue to increase.
To be clear, the year I reach full retirement age for Social Security, I can earn $48,600 before I need to pay back the $1 for every $3 I earn. Is that correct?
I'm reading the question as well. Yes, you can't earn anything more than 48,600 in 2020. If you do anything after that, you are going to get a reduction of 30%, 33% basically.
When you refer to the year of reaching full retirement age, do you mean the calendar year, or does it mean the 12 months following reaching full retirement age, or is it something else?
Full retirement age is dictated by the Social Security Administration's chart. So depending on your birthday, it's basically on that chart. So if we go back, who can claim? Here you go. That is exactly when you reach full retirement age.
All right, so this one, we can have a webinar on retirement income offerings sometime, right? About bonds, annuities, and IRAs. Yes.
Yep.
Okay. Consider it coming up down the road. Only in the year of reaching full retirement age. After that, no reduction. That might be a follow-up from another one. I'm gonna keep average Social Security is around 1,400. What is the highest amount one could receive based on income?
I would say take that one offline, but it really depends a lot on how much money you make over your lifetime.
Okay. How does working part-time or having reduced wages the last decade of your working life affect your payments? Does it reduce what you get?
It's cumulative earnings. So, I mean, if it will reduce it a little bit, but it's not, I mean, you're not paying as much into the Social Security Administration. You're not, right? Because it's a pay kind of, people pay in, people take money out. And so it's supposed to be fairly equitable in regards to, if you paid in a lot more, you should get a little more out. So if you are paying in less those last 10 years, yes, it's going to reduce your Social Security benefit a little bit. You're still working, but you're not going to, if you had continued the your trajectory before those 10 years the same way, you would have had a bigger benefit.
At what age must I take Social Security benefits? I am a widow, if that matters.
There's really no advantage to delaying past 70.
If I want to claim my spouse's Social Security benefit, does he need to claim too?
No.
How does the reduction apply to retirement income?
The reduction of, I mean, if it's income and it hits your AGI, adjusted gross income, it's going to, and crosses those levels that we talked about, it's going to reduce your benefit.
All right. Once you reach 70, if you are working, is there any limit on the amount you can make while working? Pretty sure no limit. No. Okay. Perfect. Do you stop paying into Social Security if you work past your full retirement age?
No.
Does the Social Security Administration put a max on how much Social Security benefits can be?
Yeah, I mean, it's dependent. There is a max. I don't know what it is offhand, but it's, it depends on how much you've made over your career.
If I draw from my ex's SSA, will it affect his own personal draw?
No.
My dad could not get my mom's Social Security. Well, then they're coming in, so that's making the check go up. I am under the old plan. I can retire at any time. Will be the same age, 67.
I don't know.
I do. Or should we do that one?
I'm under the old plan. Old plan, I imagine they're referring to the CSRS plan, is my guess, before FERS was put in place. Will be, I'm not understanding, will be the same age as, yeah, no, I understand the civil service. Yeah, I mean, if you're civil service, you never paid into Social Security, so if you're not going to get a benefit from that person, there is no benefit to be given because they never paid in. So hopefully that answers that one in regards to, my dad cannot get my mom's Social Security.
Okay. And then anyone else that it did say take offline, again, you can reach out to Michael, and the information that I send out as soon as this is over. But we do have some that came in before the webinar, and I just wanted to make sure to ask those. How is Social Security taxed at the federal and state levels?
It's really not taxed unless your income is at the levels above, and then it will be eligible to be taxed, and it'll be taxed at your current tax rate.
Right. And I am 62 now and retired. If I take Social Security at full retirement age, which for me is 66 in 8 months, and die at age 85, do I get more total Social Security benefits than if I start receiving Social Security at a later date?
If I understand that correctly, I would just say it's hard to know exactly when you're going to die. So it's always, there's a little bit of a risk reward trade-off in regards to delaying that Social Security benefit. If you delay it till 70 and you die at 71, well, guess what? It is what it is, and you're not going to get the benefit, and your heirs, if they're above age 18, they're not going to get it. It's just, it is what it is. However, the average life expectancy for most people nowadays is well into the 90s, 93, 95. And with the advances of medicine, it continues to get longer. So that's why the general knowledge or consensus from a financial planning perspective is, if you can delay, delay.
Just to be clear the deductions to Social Security you have talked about is contingent on you receiving Social Security benefits. If you continue working and do not take Social Security benefits, there is no deduction.
Correct. You have to be taking the Social Security benefit for there to be any reduction. If you continue to work till 70 and don't take the benefit till 70, you're not going to get a reduction.
All right. If a person works or pays in for 35 years, then stops working but doesn't collect benefits until they reach full retirement age, how does it affect their payments? Does it lower it much?
No. So, I mean, if you work 35 years and then were able to retire and live on other things, you're still going to have your benefits growing because you're not taking it. So, I would say if you were able to wait and not take it, I would wait the extra little, 2-3 years till you get to 70, honestly.
All right. And this one you might want to read. It's got more numbers in it if you can
All right.
see it.
Yeah. Let me just. Okay. So if I am reading this correctly, if you reach Social Security in 2020, full retirement age, right? In 2020, anytime in 2020, your limit is 48,600 with no Social Security reduction. That's the way I understand it. As always, consult your CPA. I'm not, an accountant, but that is the way that it is understood.
All right. So this is a good closing question. One of the members, can you talk a little bit about how much does a session cost to work with the fellows advisor?
Yeah, sure. So, nothing. Right. We're going to have a conversation. We're going to make sure that we have a good kind of basis for a relationship and make sure that there's an opportunity where we can actually add significant value. So, our first conversation is always just kind of informal. And after that conversation, you'll have the knowledge to make a decision whether or not you want to continue the conversation with us and make sure that there's actually something that we can help you with. If it's just bouncing some questions off of us, we're happy to do that as a benefit with the United States Senate Credit Union.
Well, that was really good, Michael. You're really smart. I'll let you close out. Or Arthur.
Yeah, that was very, very informative. Thank you, Michael, for fielding all those questions, and thank you to all the members who submitted your questions. And hopefully, we addressed most of them. But if you do want to follow up, you have more questions, or you just want to learn more about what Fellows has to offer, feel free to reach out to Michael. Give them a phone call. Like I said, they're an incredible resource for our members and to the credit union. So I want to thank everyone who attended today, and thanks again to Michael for the presentation. It was great, and thanks to everyone who was here.
Thank you, everyone. Have a great afternoon. Thanks, Arthur. Thanks, Carrie.
Thank you.